When the fundamental fits the price action, the story becomes very easy to write or tell after the fact. And in most cases, it is fairly easy to write what happened. For example, if the Reserve Bank of New Zealand says that they intervened and the currency is significantly overvalued, guess what might happen to the New Zealand dollar? Well, it might fall very sharply to the downside. That's a pretty an easy cause and effect story that you can tell that would make sense, wouldn't it? And so that becomes a very easy story to tell. And then we have the BOJ increases QE. That's been the story of late that has caused the yen to fall sharply lower and for the Nikkei to go sharply higher. And these, again, are stories that are written, fundamental stories that are written that give you a cause and effect for a currency pair's or stock market's movement to the upside or to the downside. And then we have things like the Fed announced QE3 was over. This is a recent story. Got rid of the significant time before tightening, and I'm putting quotation marks around that significant time. And they also said there was not a significant underutilization of labor. This was a different tact by the Federal Reserve or the FOMC and different story that they told. And what did that do to the U.S. dollar? It caused the U.S. dollar to move higher. Again, very easy story to understand and interpret. And if the market moves in the same direction of the story, it becomes pretty much a slam dunk. The next day, after the FOMC announced those three things, or three main points, what did we see in the U.S.? We saw the U.S. GDP rose by 3.5% versus 3% estimate. Wow, that's good news for the U.S. dollar, right? Because if you have stronger growth in the U.S., the dollar should move higher, right? And on the same day, Germany actually came out and said that their CPI fell by minus 0.3 versus minus 0.1 estimate. So, boy, this is a story that I'm going to write down, and we're going to understand that. Well, if the U.S. growth is going higher and German CPI is going lower, what does that imply for the euro versus U.S. dollar? Well, of course, it implies that the euro should go down because the euro is, its CPI is less. That's bad for the currency. And the U.S. growth is stronger. But what happened on the day? The euro moved higher. And you ask the question, what's going on here? Why did the euro move higher on this day when the fundamentals were obviously pointing toward a lower euro and a higher dollar? Remember, we had the FOMC that was more hawkish. We had the U.S. GDP, which was better, and we had the German CPI, which was weaker. The euro should go lower, not higher. And in fact, the story should read, the euro dollar weakened because the GDP was stronger and German CPI was weaker. That should be the story that I write, the fundamental story that I write in the paper, or that I give that quote to the Reuters or the Wall Street Journal or whoever, or Bloomberg. And it's what you should write in your trade blotter. This is the fundamental news that should have caused a market reaction for the euro versus U.S. dollar. But it just didn't go that way. And on this day, I wrote a post, a commentary on our website at forexlive.com. And I said this: the U.S. GDP was better than expected. Okay. CPI out of Germany came out worse at minus 0.3. EU flash estimate comes out tomorrow. That was for the CPI. The fundamentals should be bearish for the euro dollar, but we are seeing a reversal higher. We are seeing the price action move higher. And then I continue on and say, technically, the price is approaching the low from last week at 126.13. It's just a level. The 38.2% of the move down from yesterday's high comes in at 126.31.6. Those are resistance levels. Needless to say, the price action does not support the story. But before I go on, Donald, I don't know. FXStreet, is this going to be recorded? don't mean to slow things down here, but if not, by the way, I will make these available to you. These slides available, so you can just send me an email at Greg at uh, forexlive.com. And what I typically do, by the way, don't mean to digress, but is I'll put them in a Dropbox, and you can if you don't know have a Dropbox, there should be a you just log in and you create an account. It's actually a nice way to put things up in a cloud there and share them, because oftentimes these files are large and sometimes they get rejected when I send them out. So just send me an email at greg@forexlive.com, and I'll make sure that I give you the slides here. All right, so let's get back onto it. So when I wrote this about the market, I implied certain things about the about what was happening, about the story. The story wasn't telling telling me and telling the readers out there and the traders out there what the fundamentals were saying. The market story, the market price action wasn't telling what the fundamentals were saying. And these are actual comments that I got to this that people wrote in to this just small little 2-paragraph comment here. And some people said that it was the options expires, and some said looks like profit taking, and some said, so what? Trading is more of a coin toss. Another person said, who knows what will happen in this market? Sort of like a coin toss. No one is interested in euro shorting, which I don't know. I'm interested in euro shorting, but maybe, I don't think no one is. I think other people are maybe, but anyway, I would have thought the euro would have gone down. Some people, or one person said it was a bear trap. Seems like manipulation. It was month end. It was near the month end. It was, the October 30th. And the euro is still a reserve currency in Nordic Swiss, so it must have been central bank intervention, buying by the central banks in the euro to, I don't know, increase their balances of euro and as a reserve currency in their balance sheets, I guess. So those are all different stories that were written by you, the people and followers of forexlive.com, as to what was the reason why the euro didn't go down and in fact moved sharply to the upside on this particular day. For me, however, is that story was a bit weak. Okay. There have been many times when there's been an option expiry and we've had fundamental news and the market goes flying through the option expiration price. There have been times when the data comes out weaker, stronger, and the market moves. It's not, how do you, it's not a bear trap, or there are times when there isn't any profit taking, or how do you define when profit taking is going to take place? Is there any way that we as traders can anticipate the story that it's going to be profit taking? And when do we know that's going to happen? And the answer to that is I don't think we can. I don't think we can really know when it's going to be a bear trap. I don't think that we can really know when profit taking is going to happen. I don't think we really know when there's going to be an option expiry that's going to cause it to stay above it, because believe me, I've seen, I know it seems like there's always support or resistance at a strike price, but I've seen it go zipping through those strike prices and have the option people scrambling on the other side, and it moves really quickly through those levels. And so those stories left me a bit wondering and a bit short of what the real reason was for the movement in the euro versus U.S. dollar. And I have a confession to make off of that. The story that is often written in the news is not really important to me. Okay, it's not really important to me why the market did something or another from a fundamental perspective.